So picture yourself being a part of a Russian roulette. Now, what is a Russian roulette? A bullet is placed in a revolver, the cylinder is spun, and someone pulls the trigger, and you are in the line of firing. So there is one bullet in possible six space for bullets. So what are your chances of being killed if someone pulls the trigger? Well, the probability of dying is 1 by 6 because there are 6 slots and there's only one bullet in that. So it's simple. 1 by 6 is the probability of dying. So what would be the probability of survival? It would be 5 by 6. So chances are there that 5 out of 6 times you will survive and not get killed when the trigger is pulled. Now let's consider the options game and just compare it to the Russian roulette game. The probability of success is 1%, and the probability of your account going to zero is 99%. In fact, this is what the general percentage being told over the media or from SEBI. I would say personally, it's actually 99.99%. So it's not like one person out of 100 is earning money. I think one person maybe out of 1,000 is earning money in the FnO. So why is it that the youth between ages of 20 to 40 are all playing this deadly game of futures and options, where the winning odd is almost zero or maximum 0.1%? I know it will be like very bizarre to compare Russian roulette with options game, but considering the trauma the trader is left with after losing all their money, all their savings in the FnO market, it's almost like getting dead. So why is the stock market concept all becoming a slot machine of Las Vegas, where you bet on a machine and try to make 5 times or 10 times the money? So this is what I'm talking about, the slot machine. So very small bets and very big winners. But whoever has been to a casino, they know very well that the winning odds are very less in the favor of uh, one who is playing it, and it's all in the favor of the one who is placing the slot machine. So similar is the story of FnO. In this video, we will find out what's really happening in the world of futures and options. Why our kids, college students, normal job employees, and even matured businesses are now trying to play this slot machine in their lives and not realizing that the money they're losing can actually be deployed to good quality stocks, and millions can be made just by sitting with the stock in the portfolio. Do watch till the end to understand this video. Just before that, if you've not subscribed to this channel, please do subscribe if you like the content and do hit the like button. Now let's try to understand the psychology of quick money, because after all, why do we come to the FnO market? It's because of quick money. So basically I put this psychology into two basic parts, and that is one, the lack of money, and the other is discontentment with what you have. So people need money. They want to be able to meet their needs and take care of themselves and their families. Poor people always have unmet needs, and there is an ever increasing stack of challenges that requires money to be solved. So they go as far as borrowing or maybe playing the game, which can be risky, of whatever they have in hand, and this uh, forces them psychologically to enter the game of FnO. The other main reason is discontentment, is because people think um, it's getting too late before they get rich, and they're never satisfied with their lives, irrespective of the level they are at. The dissatisfaction and the lack of money are the two main reasons why we see an unprecedented rise in FnO and stock market speculative trading activity. Just note that I'm making a word called speculative. I'm saying that word. Just make sure you understand that I'm saying speculative because there are other ways to make money which are more easier compared to this speculation. But most of the people in the markets are not interested in that. Well, here's another surprising thing which I see in today's market is now here's a graph of what has happened in the Indian market when it comes to the FnO. And this is according to a study by the SEBI, that's the Securities and Exchange Board of India. This is not made up. And the total number of unique individual traders who traded the equity FnO segment was 45.2 lakhs in the financial year 2023. And just look at that number in 2017, it was only 7 lakhs. So what has just happened here? What really has changed in the market that there is a 500% increase in FnO traders? I mean, is it that all the money is being made in FnO? I surely bet on that most of the people are losing it. But why is such a big craze for this FnO market? And why they don't want to trade equities, just want to trade options or futures? Here's a little snapshot which we see. There's more than 5,000 companies in India, listed companies. It's actually more than that. Derivative contracts are for 193 stocks and indices. So only 193 stocks get into the FnO segment, that's futures and option segments. And when we take the futures and options and the number of contracts together, there are about 46,000 individual contracts when you combine futures and options, considering various strike prices. What happens is the index option is gaining the most volume, and that's 98% of the total derivatives volume. Now, what is index options? So you see what's happening? No one wants to look for fundamentals of a share. No one is actually interested what is inside these Nifty 50 and Bank Nifty contracts, or what are the companies actually doing in this. But it's very simple. You just have to trade the index options. And that's what is happening. 98% of the derivatives volume is happening in the indices. Currently, in most markets, you will see derivative volume account for 5 times to 15 times the cash market volume. So you see the numbers here. Like, for example, you see Japan, and Japan is 2 times the cash market volume. So let's say if $1 is traded in Japanese cash market, the turnover is $1. In the derivatives market, it's $2. So that's just twice as compared to the cash market. Now you go to the more mature market, like the US. Considering US as the grandfather of the stock market phenomena, uh, the derivatives traded is 9 times the cash volume. And you move on slowly and look at India. 422 times the cash volume. I mean, that's just incredible. I mean, how can that happen with an emerging economy like India? We are not very mature in terms of financial markets. Whoever says whatever they can, but we still a long way to go to establish ourselves as one of the renowned markets in the world. Currently, only US, UK, Japan, Germany, all these are the top markets, stock markets. India has a long way to go there, but the derivative volume is just going mad here. I mean, 422 times the cash market volume. That's just crazy. So, in short, what's happening is one rupee traded in the cash market, and at the same time, 422 rupees traded in the derivatives market. That's the difference. And that difference is huge. I mean, it's never happened in the history of stock market or in the history of global finance anytime. Here we have a look of the same thing, which is on a bar chart. And you see um, countries like Poland having 1 time the cash derivatives. Hong Kong, which is a big market, is only 5 times. US 9. Germany, which was on the higher side compared to all the others, is only 36. And look at this. This is This is madness. 422 times the cash volume. Now, what are the factors which have come into play to make this 422 times the cash volume? Is obviously listed here. The one is the weekly expiries for various indices. So now you have from Monday to Thursday, you have every day there is some expiry or the other. Bank Nifty, Nifty, Fin Nifty, Nifty Mid Cap, and all those indices have expiry from Monday to Thursday. So you can open up your screen um, on everyday basis and can trade some index for sure, because there would be an expiry on that day. And what happens on an expiry day is you get the OTMs, like out of the money options, um, very cheap. And what the new guy is doing is buying out of the money very cheap options and just praying that the index would reach there by the end of the day, but it ends up at zero most of the time. The other thing is the embedded leverage. Now you can take a position of which can turn into a big advantage with a very small amount. So it's very similar to a slot machine. The slot machine you'd bet just like, for example, 1 rupee and then expect to earn 100 rupees. And similar is the embedded leverage in case of derivatives, where you can just bet a very small amount of money. It's like $250, or maybe like $2,000, or maybe like 10,000, and then think of earning 10 lakhs on that. And it all happens, the all calculation happens in the hindsight, which has happened in the past. Nothing's happening at that point of time. But because you've done all the study in the past, uh, it seems possible that the end of the day will be like you'll make your money like 100 times. The third point which I see is the ease of onboarding. Now, here's a very interesting thing which I see is like when I opened my first demat account for equities trading in 2008, it took 2 weeks. That 2 weeks work, or like 10 business days work, is now turned into 10 minutes. So now you can think of trading the markets at 9 o'clock in the morning, open up the demat by 9:15, and you can put your trade at 9:20. And that's what is worrying me. I mean, it's become so easy for people to gamble, and that ease of onboarding is, I would say, the biggest reason why people want to come and try this. Let's say let's lose like a couple of $1,000. I mean, we have uh, like much more than that as savings, so why can't we just risk 2,000? Maybe that 2,000 will make 2 lakhs for us. Who knows? Because we have heard about Rakesh Jhunjhunwala, we have heard about Harshad Mehta, and they've made their money trading. So why not me? And there's no financial education required to do this. It's just a betting thing, and anyone can do that, right? The fourth problem which I see is the new generation trading apps. The trading apps are so fancy. There's so much of charting these days. So much of technical analysis is RSI above 70 is a candlestick showing a doji or a hammer. Is the moving average 7-day crossing the 50-day from the bottom and all that shit. And that's what is happening today. It's become like a game, and the gamification of the FnO market is actually killing young people. And they would, when something happens, when they lose a big amount like 10 lakhs or 20 lakhs, they go off market and they don't want to come back. And they say that, okay, this market, the stock market is actually a gamble and should never be trading there. So here are three very important points which I would like to highlight here is equity derivatives account for a staggering 99.6% of the Indian stock market volume. The total value is $4.3 trillion. But by the way, that's the market capitalization of the entire national stock exchange stocks. In fact, even more, and 125% of the underlying company's market cap. And over 200% the free float being traded every day. So the free float that the shares are which are floating in the market, 200% of that value is being traded in the derivative segment. So that means that every trading day, the derivative trades are 1.25 times the entire Indian stock market capitalization. If you don't understand this right now, it's okay, but just try to understand that the whole market capitalization is being churned at least 1.25 times a day. That's incredible. That's a big number when you come to understand this. Now, let's talk about how these traders came in and how they started trading so much. I call them the post-COVID traders. This is the new age, new generation of traders. So, who all are trading in the derivatives market and who all are creating this immense volume? So, let's understand who these guys are. Now, the surge in the derivative volume is a result of increasing penetration in tier 2 and tier 3 cities. The top metro cities like Mumbai, Delhi, Calcutta, and Chennai, they were already trading a lot of volume in the stock market. Obviously, Mumbai and Kolkata being the top cities doing that. But what has happened now is the tier two and tier three cities. Luckily, I get to visit these cities very often in a year, and what I've seen is uh, everyone is sort of trading the options market. Some people are into cryptos, but in this video, we cannot talk about that. We'll maybe do some other video on Bitcoin. The derivative volume is actually surging because of the increasing penetration in tier 2 and tier 3 cities. So what really happened during the COVID-19 and why I have named this the post-COVID trader? So everyone wanted to turn to something where they can earn like $1,000, maybe just sitting for a couple of hours, and to do a few clicks and earn that. It's pretty easy, right? It's the easiest way to make money. I mean, imagine the employee going to a job and earning like 30,000 a month with 2 hours of traveling and preparing a time schedule to follow and getting firings from the immediate manager. Well, we don't have to do all that. If we can just spot a trade, and actually, no need to spot a trade, just buy an out of the money call option on Nifty, because Nifty always goes up and has done since COVID, because Nifty never goes down. If you see the chart from 2020 April, and if the call comes down in price, it's simple. You just have to average it, and sooner rather than later, uh, the Nifty is going to cover that strike price, and you can just buy an option for like maybe 5 rupees and turn it into 2,000. And that's probably the easiest way to make money in this world. I mean, you don't have to do anything. You don't have to be responsible for anything. You don't have to reply to emails or anything. You just have to click and you can get 5 rupee turned into 2,000, or maybe 250 turned into 1 lakh, who knows? So it's simple math, right? And most of these traders are retail traders because they think, okay, I'm already doing work from home jobs, which is no one's monitoring us, no one's supervising us. So why not do this side by side and trade some and get some more money, right? Nothing's wrong in that. But by the end of this video, you'll see what exactly is wrong with that attitude. Now, who are the people, what I've seen with my experience, who are losing a lot of money in the stock market, especially in the derivatives segment? The one is the engineers. I have a lot of engineer friends, and each of them have like a different WhatsApp group where they uh, put their trade details, and there's a community which buys together and sells together, which shares all the stuff in that group. And believe me, when I saw that, it was like very stupid of them, because see, engineers are an interesting lot if you go to see, and there is a self-created delusion that they can crack the market code, which is totally false. Understanding the options Greek will make you more money in the derivative segment. So the picture which you see on the right, which shows you that someone's building, I don't know what that is, but it's definitely a mega structure which is being built by an engineer. Well, that's not happening anymore. engineers who are supposed to be building bridges, working on AI to solve bigger problems, and integrating technology in healthcare so that we can track a disease which is in an early stage. All those stuff is not happening with engineers anymore. Engineers are now buying out of the money index options, betting small amounts, trying to make it a big jackpot out of the FnO market. The only problem with engineers is that they think they can solve the market code because they've been trained like that, problem solving attitude, which we call. And that's the biggest worry. I see the most of the money lost by engineers. In fact, people with very good salary packages are now in debt. The problem with tier 2 and tier 3 cities is the Telegram tips and the WhatsApp tips, which is basically killing them. And if you travel to these cities, you find everyone talking about options trading, and mostly they would be under 30, under the age of 30. And once those without jobs are trading the markets and having a false sense of motivation. Well, the third psychology, and this would be like a pretty general one, and it says, why should I not earn like 1,000, 2,000 every day from a market which seems to be so easy? You just have to make a few clicks and just try to understand the direction of the bank nifty or nifty, and you just have to place your trade, maybe in call, maybe in put. But that's not very easy. That's not how the game is actually played. Incidentally, individual traders belonging to the age group 30 to 40 years and have the highest participation, and that's 39%. And this is FY22 figures. The young individual traders aged between 20 to 30, participation is 11%. So the youth from 20 to 40 is actually 50% of the derivatives volume. And you know what happens in this age from 20 to 40? You want to get rich, right? You want to get rich quickly as well, because that's the age when you can show off to your friends. You can buy a new Lamborghini because Harshad Mehta did it, and so can we. They don't realize that 15 to 50% of their profits, whenever they make one, is lost in transaction cost. So if at the end of the day, when you're break even, you're a good trader, and that's what uh, the old traders will tell you, is that if you trade and you get break even, you're a good trader. There's something missing, like a small one or two step which needs to be corrected, and you will be profitable. The most important thing here is 50% of the profits are lost in transaction cost, and that's why you're never profitable. October 2023, the average daily volume, that is ADTO, in the FnO segment is 329 trillion. Yeah, that's trillion. The same thing 1 year ago in October 22 was only 143 trillion. So what has happened is it's just an increase of 130% in the derivatives volume. And look at the retail cash volume. So retail cash segment is only 20% increase. So you can imagine how big this FNO market is getting now. Here's a look again. You look at the bottom line, the red line over here. It's 10 times what it was. Like I'm sorry, 10 billion dollars per day in the cash market volume. And look at this for derivatives. It's 4.3 trillion dollars. That's amazing. And see, when it started, I mean, there was a rise from 18 to 19, but it's just skyrocketed after 21. And look at this. This is an exponential rise in trading derivatives volume. So why derivatives? Well, human greed and a few regulation changes in FNO have made the segment attractive for all varieties of traders. Many factors can be attributed to high volume in the FNO by retail traders, citing gambling instincts and human greed. These two are the biggest driving factors. Now, the other thing is, how boring is it to buy equity shares and mutual fund and stay invested for 15 years to make wealth? Well, we can't wait that long. Because when that happens, we would not be young anymore, and life will be boring then, and we need all the money right now. And it's possible, as I have seen on YouTube, and I have seen the screenshots on Twitter, and it's really possible. And I know it deep in my heart. I just need the motivation, right? That's what is killing you. The number which you see here is the total average daily turnover, and the retail turnover is 117. So that's very big. Um, and you see the growth in the segment, 98% in the October month. Similarly, 130% growth in uh, this is all YOY, I mean, compared to the previous year. So 130% growth in FnO volume overall, and 98% growth in FnO volume when it compares to retail traders. So I hope this is clear. Percentage of individual traders made loss, that's 91. And percentage of individual traders made profit, 9%. That's what in FY19. FY22, 94 traders out of 100 made losses. 6 traders out of 100 made profits. But you look at the problem here, and that will show you what the real issue is. The average profit made by profit makers is 8,347, and the average loss is 90,000, and that's in FY19. What's happening today is 60,000 is the average loss size of today's FnO trader, and only 3,000 rupees profit for the winning traders. Isn't that strange? Because that shows you that the profit taking is very small. The average loss making is very, very big. Net, you don't make any money in the FnO. So who gets rich? Who actually gets rich with all these stuff happening? Well, the NSE gets rich. The brokerage firms make brokerage on your trading account, and they get rich. The government collects fees of all the trading activity happening, but you never make money in FnO. So this is incredible. See, retail traders on aggregate lost more than 80% of their bets. You are having an 80% of probability of entering the trade with the odds of losses, where the odds of losses are 80%. And then you make all the other mistakes like averaging or getting out too early and all those stuff. And that's why there is a net loss every time. Around 45,000 crore was lost by 90% of participants. And participants earned 6,900 crores. So 45,000 crores was lost. Now, here's one important thing which I want to discuss about. It's probably very underrated, but that's the big reason why people are losing money. What my personal experience in the derivatives trading universe is that most of them cannot stop thinking of the options market. And they say that it takes only one trade to cover all the losses and make profits. So that's the biggest argument if I ask someone why you trade. And that one day will come if you trade consistently. And that's what they think, and which is actually right. But you know what's going to happen on that day when your trade is right? You will not wait till the full profit potential, and you will go out early because of volatility. And believe me, that's what is going to happen, because I've done everything in this market. I know what you're thinking. So it is time that we get sensible and start investing in equities. You know what the biggest joke is in the FnO is when people say, I don't buy options. I'm an options seller. I sell options and I eat the premium till the expiry day. Let me tell you this. Option seller needs to understand that even if they make profit 90% of the time in the options selling strategy, the 10% time when they lose, they would end up being into their negative profit and loss territory. So what I mean is, like, for the 90% of the trades being positive, you earn like 1 lakh. but that 10 trade will put you into negative 3 lakhs. So the overall payoff has to be understood. And that's like a very naive thing to say that I sell options. Similarly, option buying who tend to buy deep out of the money options to get large leveraged payoffs need to understand the big moves happen only 5 to 10% of the times. And every time you come into a trade and start praying, okay, come on, let's go for a big move, that doesn't happen every time, right? I want to talk a little bit about the discount brokers. Now, trading platforms and online brokers like Zerodha and Upstocks have helped grow the market, where tools for simulation of FnO strategy is provided to retail investors who never had a chance to do this earlier. Now you can just put up your options on a software and see how much margin you need, what can you make from it, and all those stuff. You see the share jump in active clients year on year in Zerodha, and now the Grow app, which is growing very fast. Um, so you see here, these clients are in crores, and you see the rise from 2020 to 21, and then boom, it's 22, and then 23 is sort of flat because most of the people are now in the market. And here's an interesting story. The average age of retail investors in India in FY19, you see the average age is 41, and in FY22, just 3 years later, the average age is 35. The average age of discount brokers list has is 29 years. That's the average for all the discount brokers. Fantasy sport compared last, the same thing is fantasy sport. It's all betting. The traditional brokers average age is 37. So the big guys, the old guys, are still sticking to the traditional brokers. The new guys, they want to trade with the discount brokers because they don't want to actually share their loss figures with anyone. And that's the biggest reason. It's sort of discrete trading which is happening, and this indicates that young people are adding up very fast. The question is, are we making great traders from these ease of technology? I think exactly the opposite. As soon as you find taking trade easier, you will lose your money easily compared to if it was difficult to trade. And I say this with when I have like about 15 years of stock market experience. My first trade was in 2008, and I did all the sorts of things which you're trying to do. And then I'm in a position to say this, that um, it's all happening because it's very easy to trade, and that's why you want to get into the market and get out very fast. I want to discuss frauds which are happening, and this is like the because people want to get into the stock market, and that's why crooks and thieves take advantage of that. And recently, I saw an article which says like an advocate from Hyderabad was shown a fake trading website, and he clicked on Facebook ad and he went to that website and he lost 85 lakhs. That's not a small amount. Um, uh, a chartered accountant lost 55 lakhs. I mean, he's supposed to be an educated finance guy. He lost 55 lakhs. Um, and there are many victims which join the premium VIP group, which everyone wants to be a part of. Um, and they're losing money thick and fast with all these fake profits which are being displayed on dashboard of these websites. People getting involved in the dabba trading. We'll surely make a video on dabba trading sometime later. What are the consequences? Now, countless doctors, lawyers, celebrities, working professionals throughout history are sabotaged financially by believing in an overnight hype. And do not assume you alone have the necessary skills, emotional discipline, or can you assess the downside risk in a complex financial vehicle? Because FnO is a complex financial vehicle. It was supposed to be for hedging, not for speculative trade. So what do we do then? Is there any advice from my side? Yeah, sure. Build an equity base. I would say people who are from the age of 25 to 35, um, just try to build up an equity base of 10 years and keep investing. Go 10 to 12 years of investment. I mean, gain 10 to 12 years of investment experience. Try to understand what really the stock market is and what really the stock market was made for. Was it made to buy out of the money call option on Nifty or Bank Nifty? No. I would say take a target. If you are starting very small, like build 1 crore base of equity shares, okay, try to do that. Try to learn portfolio management and diversify that in gold and ETFs and see if you can make a base of 1 crore. 1 crore is not a big amount in financial market. So, but how do you do that? So you earn money, invest a little, do all your research, try to find companies where you can invest, build up an equity base. Equity is like an asset, like a home. So if you buy a home, similar way you can buy an equity share. Try to buy top companies, try to build up that base. Within 10 years, you will get a compounded annual growth rate of around 10% in the Indian market and try to build a base of 1 crore. And once you have that base, start with a small trading amount for 2 years. Do that, record the profit and loss, and analyze the trades. You have to analyze every trade. The most important thing is ask yourself why. Why are you trading the stock market? Why you want to trade the FnO? Is it profitable for you? Or you can just build your base in equity and buy a new home or something, buy land, a piece of land somewhere, which will give you more appreciation. So you have to be patient in this game. And that's what is lacking with most of the young traders these days. Thank you for watching this.